Welcome back, and today we are going to discover what my second prediction in the last 6-7 months is going to be. Prediction number one was right, and we were talking about interest rates because they have fallen back. When everybody else was saying they're going to 8-9%, I was saying they were going to go the opposite way. And we did a video on that. It's come true. So we're going to go over my second prediction of where the market is going to go in 2023. First, we're going to talk about mortgage rates. Where are they going to head for this season? We're going to talk about buyers, the ones that are on the fence. Are they going to come back in the game? Are they getting off the fence and are they going to be back to buying? I don't know. We're going to find out. Sellers, are you going to see multiple offers again? It's a possibility. Now, if you like the content that we're putting out, go ahead, find the subscribe button and the bell icon, click it so you get notified of our videos that we do every single week. If you want to schedule a meeting with me, in the description is a link to my calendar. Pick a day and time that works for you and schedule away. Before we get into all the meat and the potatoes of this, I'm going to leave you with a little nugget. I want you to write it down, jog it in your memory, put it in the back. We're going to come back to this little nugget at the very end and it's all going to make sense. But here's an interesting fact for you. In 2023, 23%, almost a quarter of all mortgage originating lenders, they're out of the game. They did not renew their license, so they cannot do any more loans. I don't have the stat for you for real estate agents, but typically lenders and agents who come in and out of the market, they follow pretty close to one another. So I don't know if it was a quarter of an agents who got out of this business and they went and got a real job, but I'm sure it was a pretty high number. So log that in your memory bank. We're going to come back to it. Now let's go down memory lane here. We're going to go back to the summer of 2022. And of course, we're talking about the real estate market. And what was that like? Well, we had interest rates that shot up very fast and very high. We had buyers get out of the market. They were canceling their contracts left and right, and they went to the sidelines, and they've been there for a very long time, waiting for the market to implode. We had sellers who had a price hangover from the COVID days, thinking that their house was still worth a bunch of money and there was still a lot of demand there. So we basically had a stagnant market that, well, stagnant in the fact that nothing was happening, but it went down. In North Idaho, we saw anywhere between a 10 to 15% decrease. However, in the last 6 months, it is January of 23, in the last 6 months, North Idaho has seen a horizontal movement with the median sell price. So I'm calling it, and this is not my prediction, so don't get this confused. I'm calling it that North Idaho, we are at the bottom and we're only going to see an uptick in prices. So let's go back to my prediction number one. I predicted that at the end of 2022 and the beginning of 23, that the mortgage rates were going to drop, and that happened. Now, I didn't predict what month or what day, but it was November the 10th. And what happened on November 10th? Well, the CPI report came out, and it was very good news, and the market reacted extremely well to it, and rates instantly started to drop. In fact, it was the sharpest decline for mortgage rates in the history of mortgage rates. It was massive, it was huge, it was awesome. And ever since November 10th, it has slowly been going down. In fact, as of the last time I checked, was in the last 2 to 3 days, rates were at 6.125%. I know it's still high compared to the 2 and 3.5%, but this is great news. Everyone else predicted that we were going to the 8s and 9s. Not going to happen. So why did we see this big, massive, historic jump in November of 2022? Well, the CPI report, which is talking about inflation, had good positive news. And those CPI reports, they are on a rolling 12-month average. And so November of 21 was a high report, and November of 2022 was low, so the average dropped, and the market responded, like I said, extremely well to this. Now, since that report has come out, it's been pretty lackluster. We are moving horizontal with the rates. For the most part, they are still going down slightly, but it's a pretty good horizontal move. And I believe that's going to continue to happen for the next couple months. Going into March, April, that's where I think it's going to change. And this is where I'm getting into prediction number 2. When April rolls around, the new CPI report's going to come out, and it's going to be positive. Again, this is a prediction, but everything's telling me it's going to be positive. And that's replacing 2022's April with really high numbers. I'm not calling April 10th of 23 another historic big drop, and rates are going to react the same way, but it's going to be significant enough where we're going to move in the right direction with mortgage rates. And then May, June, and July, all those months are going to get replaced with good CPI reports, and that's just going to open this gateway of all good positive news, and that's going to help our mortgage rates drop into the 5s, maybe into the 4s. So this is the prediction, that we are definitely going to be in the 5% range in May, and maybe by midsummer, late summer, we're going to be back into the 4s. So what does this mean for buyers? Well, if you're on the sideline, your window, and I hate to say this, I'm not trying to scare you. If you know me, I am not trying to scare you. This is all opinion right now, so please remember that. But if you're a buyer right now, and you're not the strongest buyer, you're not like some folks who can just waive every contingency and go way above asking price, they're coming in with cash. If that's not you, that's fine, that's okay. But your window is going to close. And here's why. As these interest rates improve, there's going to be a ton of buyers who are on the sidelines watching, and they're back in the game, and they're buying. And what does that mean? Competition. They're going to be just like you. They couldn't have gone above asking price. They couldn't have waived contingencies. They're on a budget. But now, since they are interest driven on buying a house, there's competition. Lots of competition. Multiple offers. And what happens with multiple offers? Who has the ability to give the best deal? So now, the house that you want, with the interest rate that you want, it's going to be more competition. That's why I'm saying, if you find a house right now, you might be better off overpaying in the sense of an interest rate right now to get the house that you want, and not settle for a house that you're like, meh, it's a house. And what's going to help get all these buyers back into the game, the media is going to pick up on it, and they're going to say, for the first time in 9 months, 12 months, interest rates, they're back to a more affordable level. And now everybody that watches the mainstream media, they're like, we got to go buy a house. The interest rates, the better. We got to get back into the game. And again, this is releasing more demand into the market, into an environment that doesn't have enough inventory to handle all of this demand again. That's going to help increase the prices of the house. That's going to help increase the competitiveness of writing a contract and getting a house that you actually want and love. And you're getting all of these people, all these buyers flooding the market again. And this is where I'm bringing in that first little interesting fact, that little nugget that we wrote down, put in the back of our memory bank. They're coming back to a field with not as many agents and not as many lenders, which is actually not too bad for you as a buyer, because those people, they probably weren't really good at their job anyways, and you're going to get a higher quality lender and real estate agent working for you. And this is something I fear. If you're on the fence now and you wait, I don't want you to be stuck again. I don't want you to feel like it is hopeless, I can never buy a house. So again, if you find the house, if you have the means and the ability to buy right now before this frenzy comes, talk with me. Let's get with Sean Kramer, who's my preferred lender. Let's go over a game plan with you and see if it makes sense for you to buy something now But not just buy anything, but find the house that you actually like and love. I don't want you to settle. I do not want you to settle or have to pay more in price or have to forego a home inspection and then you find out there's major things wrong with the house. So that's my prediction. Prediction number 2 is we're going to see another little buying frenzy in 2023. It's going to be a good, healthy market for, not healthy. It's going to be a good market for sellers. Buyers, just be prepared. Have everything lined up, ready to go. Have your lender squared away. Your real estate agent, have that team, have a good team around you to support you. Thanks for watching, and we'll get you on the next episode.